I'm Howard Spumberg, and this is a BAM Credit Insights video on the New Jersey Economic Development Authority's upcoming sale of $596 million of motor vehicle surcharges subordinate revenue refunding bonds. Bonds in the issue insured by Build America Mutual will be rated AA with a stable outlook by S&P Global Ratings. The issue will carry underlying and uninsured ratings of BBB+ from S&P and Baa2 from Moody's Investors Service. The bonds will be payable solely from pledged property, which consists primarily of dedicated motor vehicle surcharge revenues. These generally fall into two categories: unsafe driving surcharges and DMV surcharges. DMV surcharges are collected from drivers who have committed certain offenses, like driving while intoxicated, accumulating 6 motor vehicle points during the preceding 3-year period, and committing regulatory violations, which include driving without a license, driving without insurance, and driving with a suspended license. Unsafe driving surcharges are assessed on drivers after they have been convicted of operating a motor vehicle in a manner likely to endanger a person or property. Payment of the dedicated motor vehicle surcharge revenues to the bondholders is subject to annual appropriation by the New Jersey State Legislature. The pledged property will first fund debt service on the authority's senior bonds and will then be available for payment of debt service on this issue. The credit analysis for this issue requires a fairly straightforward assessment of the likely future collections of the dedicated motor vehicle surcharge revenues and a comparison to the debt service requirements for the bonds. Currently, the dedicated motor vehicle surcharge revenues are sufficient to provide 1.3 times coverage of the maximum annual debt service, including both the senior and subordinate debt. The dedicated motor vehicle surcharge revenues have been declining over time, but that trend would have to accelerate significantly for such revenues to be inadequate to meet the debt service requirements. Other than refunding bonds, the state is not permitted to sell additional debt secured by these revenues. Additionally, because dedicated motor vehicle surcharge revenue forecasts get less certain the further into the future they go, the issue is strengthened by a turbo redemption feature, which will be applied starting on August 1st, 2019, and each August 1st thereafter. The turbo redemption feature requires that any dedicated motor vehicle surcharge revenue collections in excess of the amount necessary to pay that year's debt service on the senior and subordinate bonds, plus to make a $7.5 million payment to the state, will be applied to the early redemption of the 2017 Series A bonds maturing between 2029 and 2034. Under the state's baseline assumption, that provision will reduce the final maturity of the 2017 Series A bonds from 2034 to 2029. In conjunction with this financing, the governor directed in a directive letter to the state's Office of Administrative Law that the expiration date of regulatory surcharges be extended until such time as all bonds secured by such charges have been retired. Ultimately, BAM's credit committee voted unanimously to insure the New Jersey EDA's motor vehicle surcharges subordinate revenue refunding bonds because of the solid debt service coverage provided by the pledged revenues and the structural provisions in the transaction, like the turbo redemption feature, that help mitigate the risk of uncertainty in long-term surcharge collections. An official statement with complete information about this transaction is available. For more information about BAM or our analysis of this credit, please email us at creditinsights@buildamerica.com.